Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to be with you here this morning as we will be taking another fresh new look at the financial market. The last 24 hours hasn't been very rosy at all, as since yesterday we saw how the market kept on going through a choppy situation as a result of the anticipation of the CPI data coming in from the US economic docket today. And though during the later part of the New York session yesterday, stroke the Asian trading session, we're beginning to see some traction as we saw how the US dollar begin to decline as a result of some risk on sentiment that grappled the market as a result of the comments made by the Fed official yesterday and of course the Bank of England governor. So we are going to be looking at all these parameters while we take a fresh new look at the market using our simple and fundamental tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory of price action today. Since For those who are joining us for the first time, I'm very sure you will be wondering what this is all about. What is it that we are doing here on the Forex Morning Mastery? Well, the Forex Morning Mastery is, as a result, is a follow-up detail to the weekend videos I usually share, where I upload ideas on what my expectations will be on the particular asset we will be looking at for the week. So during the Forex Morning Mastery, we come here and review and do follow-up detail on the 1 hour time frame. So we gather here every day as a result of this to position ourselves strategically ahead of both the London and the New York session. So the session kickstarts officially 9:05 a.m. West African time, 8:05 a.m. UTC, and my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us in this community, the better you get to understand our analytical approach, utilizing the information gathered here to make your own independent trading decisions and strategies. So once again, I welcome you on board, and with that being said, we shall be diving right into the business for today. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be driving the market sentiment for today. And for those of us who have been for a while now, you know how important this is, as these fundamental factors often manifest in terms of technical patterns and price movement. Now, by monitoring the economic calendar, we can get to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we are monitoring during this week, our focus on the economic calendar has been on both the United States and the United Kingdom economic features. Now, for today, Thursday, January 11th, we have the most impactful event of this week, which everyone in the market is looking forward to, and that is the consumer price index coming from the United States economic docket. And for those who don't know how important this is, the CPI data is an inflationary or deflationary tendency measured by periodical summing the prices of a basket of representative goods and services and presents the data as the consumer price index. And one of the major reasons why the CPI is so important is that they serve as a key indicator to measure inflation and changes in purchasing trend. Now, generally speaking, a high reading is considered as positive for the consumer, while a low reading is considered as negative. Now, if we look at what the data are saying here, there is the expectation that there's likely going to be an increase on the on the month, and that was the exclusion of food and energy on the month as well. But for the year-on-year, there is an expectation of the 3.8%, which is lower than the previous data. So we are going to be looking forward to what the actual data is going to be today. Will it be just as expected, below expectations, or even beyond expectations? But one thing we want to know, we want to take note of, is that this data here today is going to be determining the trajectory of interest rate decisions in the United States. And of course, we know how the US dollar is related to most of the currency in the world, and whatever happens here today is definitely going to be taking an effect on all the currency assets on our watch list. So this is one data we are looking for today. So we are going to see how the market is going to be anticipating this event, because we do know that before the event, before the data is released, there are some inner circles who will become aware of what the data will be, and of course we start placing their positions in the market. We as technical traders, we want to see the foreign market structure to identify this pattern so that we can strategically position ourselves for the move. So as a result of this, we shall be diving right into the business for today, and the first asset on our watch list is, as usual, the USOILSPOT. Now, on the USOILSPOT, we had an interesting situation happen during the course of the New York session yesterday. Though we had the privilege of buying, I remember we have been buying this asset since Tuesday's trading session. Let me quickly run through how the week started for us all, for the sake of those who missed out on our earlier sessions. Now, at the beginning of the week, we realized our price was initially confined within this range at the $73.75 level and the $72.65 level, to emphasize the level of indecision that was going on in the market at that particular point in time. And of course, whenever we have a range like this, we usually exercise patience, waiting for either price breaking out the resistance line to give us an opportunity to buy, or price action break down the support line of that range to give us an opportunity to sell. But instead, we saw how price did break down the support line on Monday morning, and which triggered our first sell position for the week. And in fact, we were able to capitalize on that move. As we moved them, we were taken out after the buy pressure emerges here, taking us out with a minimum of 150 pips, or depending on where you have moved your stop losses to. So right here on Tuesday's trading session, we begin to notice the transition of price action into a reversal setup, where we saw how price was confined within the $71.20 level and the $70.40 area, to emphasize the indecision that kept the market proud to our live session on Tuesday. And when we digged further, we saw how price action was transitioning into what looked like a double bottom structure, as we saw how sellers found it difficult to break down the previous low, giving us a beautiful neckline, which also shares a confluence with the resistance line of that range at the $71.20 level, to give us another opportunity to join an uptrend move. And that also triggered our first buy position, as we saw price move about 150 160 pips thereabout before the bearish momentum came in yesterday, taking us out of that position too as well at a reasonable amount of profit. Now, during our live session yesterday, we did emphasize a couple of factors here that will be driving our sentiment for yesterday. Now, one of them was the $72.65 area, where I told you that we are having a buy stop order above that structure to capitalize on the next bullish momentum. And if price goes on to break out of the $73 area, we will be adding more position. In fact, we saw this happen during the New York session, a couple of hours into the New York session, and price moved about 80 pips on the first position, and on the second position moved about 40 pips before the sell pressure came in, taking us out of that position with a reasonable amount of profit, or at a worst case scenario, break even. Now, something happened here yesterday which was quite interesting, and I think I did update it that we will be selling only at the breakdown retest of the $72.20 level. And remember that I mentioned here yesterday that if price breaks down and we see any selling pressure, that this area at the $71.20 level, which shares a confluence with the ascending trend line we spotted on the higher time frame, should be considered before adding or getting ready for a reversal setup. So we said here that as soon as price tests this level, we want to be moving our stop losses accordingly, secure the current sell position, and let's see how the market would react to that structure. And if price breaks down, retest, we want to be looking out for more selling opportunities, and if a reversal setup evolves from that area, we shall consider buying this asset. But you see, when price got into this area, in fact when price got into this level during the later part of yesterday, I did move my stop losses, secure the current sell position. But unfortunately, this all reversal setup around the $71.20 level happened during the Asian session, and in this part of the world I was quite asleep at that particular point in time, so I missed out on that opportunity. But some of us did took advantage of this move right here, and well done and kudos to you for capitalizing on that one. So if you are taking this one, you should be running with a minimum of 50 pips in profit at this point. Well done and kudos to you. Now, if you took advantage of that buy position, I want to encourage us all to move our stop losses to probably break even at this point, as we never can tell, sellers could still take over this particular market. So kindly move your stop losses accordingly and secure this current buy position at worst case scenario break even. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Well, I want to emphasize here that some of us will be wondering, why did we have this bearish move yesterday, especially when our market is looking very bullish? Well, first of all, from a fundamental perspective, we saw we had yesterday remember I was mentioning here that we will look forward to the Energy Information Administration report, which of course came out and revealing a 1.338 million barrel increase in crude oil stocks, contrary to the expected 0.675 million barrels. Now, when we have a high crude stock, it simply states that there is a reduction in demand, that is, the supply has increased for them to have been able to increase their stockpile on the commodity. And whenever there is an increase in supply, we do expect there will be a crash. And I think as a result of this data, the fear that increase in supply could take over the market resulted in majority of key players in the market who are the buy positions to start taking some of their profits off the market, and as a result of this reflected on the chart has a bearish momentum to the downside, and we saw how price moved right into that area. However, in the last 10 hours, we saw how crude oil prices, especially during the later part of the New York session and during the Asian session, we saw some buy pressure resume around that $71.20 level, and this was a reaction to the latest development in the Red Sea, where we had the United Nations criticizing the Houthis, and this we saw how price increased in momentum again during the Asian session. But at this point in time, we begin to see some settling as market participants digest the effect of what really happened yesterday. And as a result of this, how do we intend to capitalize on the next move today, especially when we look forward to the CPI data from the United States, which is going to be bringing in some fresh impetus on this particular asset. So looking at things from a technical standpoint, how do we intend to capitalize on the next move? Well, first of all, I would like to emphasize the importance of this ascending trend line, which we spotted on the higher time frame. For those of you who did not watch my earlier session on the US All Spot on Monday, please check the link in the description box below. I was able to do a top-down analysis on this asset where we emphasize the importance of our key levels and trend line and how they are going to be playing a major role in guiding our trading decisions for this week. So with this ascending trend line here and price action staying afloat above the ascending trend line, I'm of the opinion that we restrain from any selling potential at this point, as the only condition that will make me want to consider selling the US All Spot today is for price to drop and break down that ascending trend line, where a retest of structure will give us further confirmation to join a decline to the downside. And if price goes on to further break down the lowest zone since the beginning of the week at the $71.40 level, we definitely want to be adding more sell positions to our existing trade. So this is how we are going to be managing any selling expectations in this particular market. However, in as much as this is above the ascending trend line, I will look out for more buying opportunities, and if price action can break out of the $72.20 level, we had positions to our existing trade, and we look forward to maximizing the potential of this bullish move at the breakout of the $72.65, the $73 area, and if price continues to climb, the $73.75 area, and of course the $74 area are all good levels to add more buy positions to our existing trade. So the ascending trend line here is going to play a major role in guiding our trading decisions for today. So I encourage us all to mark out that trend line, and in fact, if you're new, please check the link in the description box below, as I did emphasize on how important the ascending trend line is on the higher time frame. So we are selling only at the breakdown retest of the $71.20 level, which shares a confluence with the ascending trend line, and we're looking out for more buying opportunities above the $72.20 level. Now, for those who took advantage of the buy positions along the $71.20 area, I did emphasize that we move all stop losses to break even at this point in time so that we can be on the safer side. So I hope I made myself very clear on the US All Spot this morning. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, I see a couple of comments here in the comment section from Fred. Happy New Year to you, Fred. Glad to have you around. I guess this is your first time with us this week or this year at all. Glad to have you around with us. Eric Mudavadi, good morning. Is that Eric Mudavadi? Because the name now is Eric Madvadi. I probably think that's the same person. Good morning to you and blessed day to you too. Hello, Torres Master. Trust you're doing very well. Happy New Year to you. It's been a while. Yes. We started the year on a high spirit and glad to have you around with us. Fred says the volume is too low, can't hear me clearly. All right, so let me see what I can do about that. Let me increase this a little bit, and please let me know how it sounds there, and if there are other feedbacks too as well, I'll really appreciate them. So please tell me in the comment section if the sound is quite good, and if it's not, please let me know too as well, and I will appreciate your feedbacks. Thank you very much. Yes, it is. Eric Madavadi says, is that a response to the sound quality, or the response to your first time here with us, or the response to the change of name? All right, thank you very much. So I'll still look forward to your feedbacks as regards to the sound quality, if it is good or not, while I prepare to move on to the next asset, as we do not have any um, questions whatsoever as regards to what we just talked about. Okay, so in the absence of no further questions, I will be moving on. Good morning, Jonah Aruna. Just saw your comment now. Good morning. Glad to have you around. All right, so let's move on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, the cable market, and in fact we've had a phenomenal 24 hours here, though we've been buying this particular asset since the beginning of this week. At some point we bought at the breakout of the 1.27200 area, which happens to be our key level for this week. For those who don't know how we got this, please watch my weekend video on the GBP USD. The links are right in the description box of this current video you are watching. So we had our first buy position here. We also added more at the breakout of the 1.273, giving us a total of about 60 pips move in price action before the bearish momentum came in on Tuesday. And I think we had a stop loss hit here on the GBP USD as a result of the chopper situation that happened. And during our live session yesterday, we did emphasize here how the current structure is likely going to be playing a major role in guiding our trading decision. And one of the things we noticed here on the 1 hour time frame was this impulsive bullish leg that happened on Friday, springing out of that ascending trend line we spotted on the higher time frame. And as a result of this, we saw price come down a little bit, do some couple of selling moves within that range we identified at the beginning of the week, and of course trading below our key level at the 1.27200 area. And we also, as a result of the lower highs, identified a descending trend line here, which we said at the beginning of the week that a breakout of the descending trend line and the key level had a 1.272 will welcome our first buy position, which we took advantage of. And from a technical standpoint, I did mention here on Tuesday and Wednesday that when price breaks out of a key structure like this, we expect that some point in time price will come back, retest the structure in anticipation of another wave of bullish momentum. And of course, we saw what happened here on Tuesday. We saw how price came back to retest the structure, and we begin to notice how that psychological level around the 1.2700 area became a barrier for sellers, as you will see that at every point in time that price comes into that area, we saw how it became difficult for sellers to break through that area, further making that area a strong demand zone. And one of the things I mentioned here yesterday is that I am leaning towards a bullish momentum, even though things are looking as if they want to go south. And I said also that if we are going to be selling, we need a significant confirmation that truly sellers are likely going to be taking advantage of this market. But I wasn't convinced enough at all with the way things are going around that area, and for the fact that price action still remains above that descending trend line we spotted at the beginning of the week. It makes quite a lot of sense to look out for buying opportunity. And as a result of this observation, we did have a buy stop order above the 1.272 area, which of course got triggered, and it took about 6 to 7 hours before the momentum gained some traction, and we went on to have a buy stop order above the 1.273, and also we had another one at the 1.27650 level which is currently where price is currently running around. So it has been quite a profitable 24 hours on the GBPUSD, as we currently have a minimum of 3 positions running in profit here. The first position here is running with about 44 pips, while the second position is running with about 34 pips too, so that's roughly about 78 pips, and the third position is currently running at break even around that area, as we see price kept on oscillating within the 1.27650 in the last 5 to 6 hours now. So well done to everyone who capitalized on this opportunity, and as a result of the movement in price action, it is high time for us to move our stop losses to secure the current buy position. And I did mention this in my commentaries this morning as regards to the GBPUSD update. So based on this current structure and with the way these things are, I would suggest that anywhere around the 1.275 area seems most appropriate to move our stop losses to. And for the fact that it is a psychological level, let's give enough breathing space below the 1.275 just in case we have some sharp or stop area. Now, with a well secured buy position at this point in time, what is going to be our next line of action for today? And in fact, what is really going on in this market behind the scene that has resulted in this whole movement we saw in the last 24 hours? Well, first of all, it is clear that the US dollar has been weaker, and the increased risk appetite in the market are helping the GBPUSD to grow. Everyone is willing to risk at this point in time. First of all, we had speeches from the Federal Reserve, the New York Federal Reserve president, that is Williams. What's his name? Williams. His name is Williams anyway, and he said something yesterday which is coming like a red flag to majority of market participants. And let me read what he said here. He said here that the US interest rate will need to stay high for some time until the central bank is confident that inflation will return to the 2% target it has stated for itself. Now, this is against what the other Federal Reserve members has been saying in the last 1 week, as everyone is already thinking of rate cuts as early as the month of March. But Williams came in yesterday to say that it's likely that they would leave interest rate as high as possible till the inflation comes to as close as 2%. Now, I don't want to buy this. I'm of the opinion that is saying this so that the US dollar will not crash ahead of the CPI data. And I think majority in the market are not also buying into this. That is why we saw this bullish traction on the GBPUSD. Whereas on the other side of the pond, we also had a speech from the Bank of England Governor Andrew Bailey, who emphasized the need to bring down inflation, but it never mentioned anything about interest rate decision at all, which was quite strange. So it didn't say anything about rate hike or rate cut or rate hike. And this is surprising following the recent clamor by leading business partners in the United Kingdom last week, calling on the Bank of England to cut down interest rate, as this has been affecting businesses across the nation, technically putting the United Kingdom closer to recession. So it's surprising he didn't mention anything about it. But one thing I could hold on to is the fact that he said that they need to bring down inflation. And what are the ways they will use to bring down inflation? Of course, increase interest. But he didn't mention anything about that. Then he also went on to talk about the low mortgage cost, which he hopes that it continues to get lower to make things easier for consumers. So from these two perspectives here, things are leaning towards bullish momentum for the pound sterling. However, it is very, very important that we remain very cautious at this juncture, as everyone looks forward to the CPI data today, which of course promises to bring in fresh impetus. And one thing we should also note here is that we are likely going to be seeing some volatility today. Very strong price movement are likely going to happen today, and let's see how the market is going to play out on that one. But trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you update. So as it is right now, from a technical standpoint, I still hold on to a bullish bias. Things are looking very bullish on the higher time frame. So I have another buy stop order above the 1.27750 level, which happens to be the highest point price action has been for this week. So if price will break out of that structure, I'm willing to add more positions to my existing trade. So let's see how the market will play out from this particular area. However, it is important for us to also take note that we could be seeing some profit-taking activity, maybe prior to the CPI data today, or maybe after the CPI data, where price could come back and retest the key level one more time. Now look at what has been going on here since last week Friday. We saw how this zone here has been a strong selling niche, strong barrier for buyers. As you saw, at every point in time, all attempt by the buyers to break out of that structure was met with strong resistance from the sellers. The same thing also happened throughout the Asian session today. So it's really a strong barrier around that point. But if price can break out of that structure, I'm of the opinion that we might be in for another wave of bullish momentum. However, if the selling pressure here persists, we might likely see price retrace back into either the 1.273 or the key level at the 1.272 to incite another wave of bullish momentum, or even drop into the the descending trend line we spotted earlier, which lines up with the ascending trend line here to incite another wave of bullish momentum. So things are still looking very dicey here, but I'm of the opinion that a breakout of this range will definitely welcome opportunities, but we would not ignore the potentials of sellers. But personally, I wouldn't be selling at this point yet until I see something significant, which of course I will let you know in the comment section of both my trading view and Telegram platform. So this is my simple view on the GBPUSD. I still hold on to a bullish bias as well. Now another thing I would like to call our attention to here is this trend line. If we connect the series of higher lows here, we have a trend line which we can also use to guide our trading decisions for today. So we have I think I will project this one into this one. So I will thicken this a little bit to emphasize its importance, and let's have this right here. We could see price retrace back into the trend line to incite another wave of bullish momentum. So we still hold on to a bullish bias as long as price remains above this ascending trend line. So this is my simple view on the GBPUSD for today. I do hope I made myself clear, and if you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as usual, I will take the next 10 to 15 seconds off to see if there are any questions before I move on. If you have found this content helpful and useful so far in the last since when have we started, since the last 30 minutes now, if you have found it useful, I'll really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too, and at the same time allow this community to grow as well. So thank you very much. I really appreciate it. I look forward to your likes right below the video. Thank you very much. And in the absence of no questions, I do want to assume that we are all on the same page, and in that regard we shall be moving on to the next and of course the final assets on our watch list for today. All right, so the next asset on our watch list for today, the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And unfortunately for me, I missed out on this opportunity as we saw gold appear to rebound during the Asian session, finding renewed buying pressure around that 2027 and the $2020 area, giving us a new demand at this particular point in time. So during this time, I was fast asleep and no orders was placed, as I do not want to risk anything due to the uncertainty that has gripped this market since the beginning of the week. And for those of us who actually capitalized on that buy position around this area, well done to you for capitalizing on this one, as you will currently be running with a minimum of, let's say, about 50 pips thereabout. And I want to encourage you to move your stop losses accordingly, securing this position at this point. Well, so far this week on the XAUUSD, we've not really done very well at all. Price has not really gained some traction, so we had some opportunities to sell at the beginning of the week after price broke down that $2027 area. It actually moved over 100 pips, but buy pressure resumed, taking us out of that position with a reasonable amount of profit, or at a worst case scenario break even, depending on where you placed your stop losses too. Then we also had the buy position triggered again on Tuesday, which unfortunately did not move very well. It moved about 50 pips thereabout before we were taken out in a loss on that one. And for those of us who bought again at the 2035 yesterday morning, it went also into a loss too yesterday. So we had two losses. We had a couple of losses on the XAUUSD since the beginning of the week, which is not that impressive at all. But we all understand why this is going on, as majority of the key players in the market are very cautious at this point, especially at the beginning of the year, want to see what the CPI data will come in from the United States before making any investment decisions from this particular area. However, the recent resurgence in gold buying is partly due to some repositioning trades ahead of the crucial US consumer inflation figures, which are weighing in on the US dollar and of course supporting safe haven assets such as the gold. And besides this, the geopolitical tensions from Israel and Hamas conflict could also be giving the gold some level of support, and also concerns about sluggish recovery in the Chinese economy is also keeping the price of gold haven assets, safe haven assets such as gold, very stable at this point in time. And the comment from the New York Fed President John Williams from yesterday, which I actually read earlier, where he stated that the US interest rate is likely going to remain high for a while until the inflation rate is close to their target, which for me I'm not really buying anyways. I think this is a statement just to make the US dollar stay afloat for a while before the CPI data comes in, and I think people are not really buying into it, because if they are buying into it, you would have seen price drop to the downside, especially during the Asian session. But instead we saw market participants buying some of the gold despite the statement made by the Fed, the New York Fed President John Williams. Now, with the way things are going anyways, that statement though had a little bit of impact in the market, as we saw the expected rate cuts that was supposed to come in as early as March appeared the consensus has reduced a little bit as a result of this. So majority are now in a limbo right now on what is likely going to happen. But I'm very sure that prior to the CPI data, we are likely going to be seeing some setups that we will use to guide our positions for today's trading session. And it's also important that we know that a stronger CPI data today is going to maintain a higher interest rate for a longer period of time. So the CPI data that's coming up today, let's hope that it's going to come lower or just as expected. But if it comes higher, the chances for price of gold to slash through the lowest point for this week at the $2,017 area will increase. So this is the $2,017 area, which happens to be the lowest point since the week began. If the CPI data comes higher, price is likely going to crash through that area, and this is the area where I will definitely be looking out for selling opportunities, though I have a sell stop order below that structure. But let's see if we could have signs of selling pressure even before the breakdown of the $2,017 level happens. But if it does, I will let you know in the comment section of both my TradingView and Telegram platform. However, if we still look at things from a fundamental perspective and technical, of the opinion that price still has a tendency of going to the upside. Now let's look at things from the beginning of this year. Remember, since the beginning of the year, the price of gold has been dropping, and if I connect the series of lower highs here, we have a descending trend line to work with, which we will be using as a key factor to guide any bullish momentum here, where if price can break out of this trend line, we will look out for buying opportunity. In fact, a breakout of this descending trend line will be a beautiful signal that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, there is one interesting thing about the trend line here. If we zoom into the structure, you will see how the trend line shares a beautiful confluence with that our key level at the $2,035 area. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying that particular asset. Now, if price can break out of this key level, it will also breach the descending trend line to further make us feel comfortable buying this asset today. So for me to buy the XAUUSD, I want to see price breakout, retest structure. Then we have multiple levels that we can use to maximize the potential of this bullish move. We have the $2,040 level, we have the $2,046.50 level, and of course the $2,050 area to maximize this move to the upside. So let's see how the market will play out. And of course, during the XAUUSD live window today, we will be together to monitor price action and strategically position ourselves for the next move. So this is my view on the XAUUSD for today. I still hold on to a bullish bias and only will feel comfortable selling at the breakdown of the $2,017 level today. So if you have any questions or you need some further clarifications, feel free to let me know in the comment section. As always, I'll just take the next 10 seconds off to see if there are any questions before we round off on today's trading Forex Morning Mastery session. All right. So in the absence of no questions, I want to assume that we are all on the same page. If you have found this content helpful and helpful so far, please kindly support the project by giving the video a thumbs up. This is the cheapest way you can support this channel to grow. and thank you very much as you do so. So I just dropped the link to the XAUUSD live window right in the comment section below. I am unable to pin it up right now because I can't find the button to pin it, but you will see my name. The XAUUSD live window is right there. You want to click on that link, click on the notify me button so you can get notified as soon as we come on live. Now, for those of you who are joining for the first time who do not know what the XAUUSD live window is all about, this platform was born out of popular demand from members of this community, where we come together to monitor real-time price action on the XAUUSD, especially during the New York session. It usually kickstarts about 5 to 10 minutes into the New York session, so I encourage us all to be part of that session as we anticipate the CPI data today. And I have the strong belief that we are going to be seeing some volatile price movement today, and through to the end of the week, I'm very sure we will be able to recoup the losses we made on the XAUUSD for this week. So I look forward to seeing you guys right in the comment section on the XAUUSD live window. So it's on this note I would like to call it a day here. I see a comment here, Itesh Mahenswari. Good morning to you. What do I think about natural gas? Well, I do not trade natural gas, and in fact it is not part of the assets on our watch list for this week. I'm very sorry I wouldn't be able to take the natural gas today. It's already 9 a.m. UTC here, and I have some other sessions to hold, and I'm sorry about that. Let's see some other time. If you're around, maybe tomorrow we can quickly run through that and see what is going on there. So on this note, I would like to call it a day. It has been a wonderful moment with you guys, as I really enjoyed every single moment I had with you, and I look forward to what today will bring for us. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you truly did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand how things work, how our analytical approach works, and eventually be able to use the information you gather here to make your own independent trading decisions. And we were able to look at the three major assets today: the USOILSPOT, the GBPUSD, and the XAUUSD, where we were able to identify simple trading setup using our basic tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory of price action today. And I do hope we were able to mark out these levels as projected during the course of the session, as you would be needing them as a reference point to guide your independent trading decision. And if you truly did mark out these levels, I encourage you to exercise patience and allow the structures to mature before jumping into any positions. And always remember that every decision we make in the financial market is more or less an educated guess, and as a result of this, you do want to be having a well-defined risk management strategy in place to ensure to mitigate against any sudden risk on your account. So on this note, I wish us all the best of luck today. Trade smart, trade consciously. Do have a wonderful evening, everyone, and I look forward to seeing you same time tomorrow, 9 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and at the same time prepare for tomorrow's trading session, which happens to be the last trading day of the week, a day where we shall be looking at profit-taking activities and of course take advantage of its move as everyone round off trading activities ahead of the weekend. Do have a wonderful evening, everyone. Bye bye.